Most small business owners are making a very expensive mistake, and they don't even realize it. Every year, thousands of dollars are lost in taxes, legally, not because of bad income, but because they simply don't know what they can actually deduct. And that's exactly what this video is about. In the next few minutes, I'm going to show you 15 powerful tax write-offs that every small business owner, freelancer, and online entrepreneur should understand in 2026. These are completely legal deductions used by real businesses every single day. But here's the problem. Most beginners either don't use them at all, or they use them incorrectly and risk trouble later. So stay with me until the end, because the last few write-offs are the ones most people completely ignore, and they can save you the most money. If you run your business from home, you may qualify for a home office deduction. This means a portion of your rent, electricity, and internet can be considered a business expense. For example, if your home is 1,000 square feet and your office takes up 100 square feet, then roughly 10% of your home costs could be used as a business deduction. So if your rent is $1,000, that's about $100 potentially deducted. But here's where people make mistakes. They'd either claim everything, which is wrong, or they claim nothing at all, which means they lose money. The key is simple. Only the space used exclusively for business can be counted. Next is internet and phone usage. If you use your internet or phone for business, part of that cost can be deducted. For example, if your internet bill is $60 per month and 70% of your usage is for business, then about $42 can be written off. But remember, personal use must always be excluded. No guessing. Be realistic and consistent. Now let's talk about equipment. Laptops, cameras, microphones, lighting setups, anything you use to run your business. If you buy a $1,000 laptop for your business, that is usually considered a business expense. Some cases allow full deduction immediately, while others spread it over time. The mistake beginners make is not separating personal and business use. If it helps your business, it counts, but it must be tracked properly. Now think about software tools. These are small monthly costs that add up quickly. Canva, Adobe, Shopify, website tools, AI tools, all of these are business expenses. Even if it's just $10 or $20 per month, over a year, it becomes significant. Most people forget these small subscriptions, and that means lost deductions. Write-off. Flights, hotels, taxis, all can qualify if they are related to business. For example, if you travel to meet clients or attend a business event, those expenses can be included. But the purpose must be clear. You can't call a vacation a business trip just because you answered a few emails. If you use your car for business, transportation costs may be deductible. This includes fuel, maintenance, or mileage. For example, driving to meet a client or deliver business-related services can count, but personal commuting does not. This is where record-keeping becomes very important. Advertising is one of the most powerful deductions. Any money spent to grow your business is usually fully deductible. Facebook ads, Google ads, YouTube ads, influencer promotions, all of it counts. For example, if you spend $200 on ads, that is a business expense, but only if you track it properly. If you run a website, your costs are deductible. Domain name, hosting, design, maintenance, all of it counts. For example, even $10 per month for hosting is a business expense. Many beginners ignore this because it seems small, but it adds up. Education that improves your business can also be deducted. Courses, training, marketing lessons, business skills. If it helps your business grow, it may qualify. But it must be directly related to your work. Random personal learning usually does not count. Now let's talk about professionals. Accountants, lawyers, consultants. If you pay them to help your business, that is a deductible expense. For example, paying an accountant to handle taxes is not just helpful, it's also a business cost, and it often saves more money than it costs. Business insurance is another important write-off. Protects your business from risks and losses. For example, liability insurance or equipment coverage may qualify. Many small businesses ignore this until something goes wrong. Even small things matter. Pens, notebooks, paper, desk equipment. All of these are business expenses. For example, a simple chair for your workspace can be included. Small costs often get ignored, but they build up over time. If you hire help, that is a business expense. Editors, designers, writers, assistants, for example, paying $300 to a freelancer for work is deductible. But always keep proper records. In some cases, self-employed individuals can deduct health insurance costs. This depends on your country and business structure, but it can be a major benefit for eligible business owners. Finally, retirement contributions. Some business owners can reduce taxable income by saving for retirement. This is long-term thinking, not just short-term savings. It's something most beginners ignore completely. And those are 15 tax write-offs every small business owner should understand in 2026. Remember, these are general educational examples, and real tax rules can vary depending on your country. But the principle is the same everywhere. Smart business owners don't just make money. They also understand how to legally reduce what they owe. If you found this video helpful, the next one is even more important. I'll show you how to actually start a real business structure properly in the USA, step by step, and whether you even need an LLC before you begin. Because understanding taxes is powerful, but setting your business up correctly is what makes it real.